Mr. J to the Pizzo just announced a 25 basis point rate hike, which is the second time that they have decreased the velocity at which they are increasing rates. And over 90% of the market actually expected this 25 basis point rate hike. But we are not in the clear yet because Jay Powell, which is the Federal Reserve chairman, said that there will be ongoing hikes because they will be appropriate because inflation has eased somewhat but remains elevated, and we will continue to do our job until we reach the targeted 2% inflation rate. Now, there was a further discussion of, after he actually announced the 25 rate hike, there was someone that asked the question, okay, what if inflation is coming down very, very quickly? He then said, hey, if it's coming down very quickly, we will potentially consider changing our policy, which would then hint at a potential pivot sooner than inflation and CPI coming down to the target level of 2%. They also mentioned that the jobs market has been extremely, extremely strong. 247,000 new jobs added on average per month over the last 3 months. And he does believe that in order to bring down inflation, there is going to have to be a below trend growth and a weaker job market. So he is alluding to pretty much that's what a typical recession is. You see a weak job market, but that's usually a lagging indicator. And then you also see lower GDP growth, which again is a recession. So he's pretty much hinting at he really does believe that there's going to be a recession, and he's trying to be hawkish, but the markets are acting very, very positively. As you can see, the S&P 500 is extremely strong today, breaking out past this previous high here, guys. This is a big deal. Not only are we confirmed out of this broadening, descending wedge that we've been in for an entire year, which is typically a bullish pattern, which we actually mentioned before this even broke, that we were very, very highly likelihood that we were going to break to the upside. And now we are starting to confirm. And I do want the daily close above this key level, which is now creating the first true higher high over the last 12 months, which is a big deal, guys. And we're also seeing the dollar continue to fall, falling well below this level here. You can see it is falling quickly. The euro is skyrocketing relative to the dollar, over 110 now. And it's very, very obvious that we are having a massive pump in the markets, okay? Now, this is a thread that I put on Twitter. If you guys are not following me on Twitter yet, go follow me here on January 22nd, which is, more than, it's about 9 days ago. If you were to look at why we are potentially being bullish, and before I tell you why I think we're due for this big rally that's happening, I'm actually long Bitcoin right now. Let's see if this closed. Oh, it's about to close here. So I just took a little long trade here on Bybit, and the reason why I am actually bullish on the markets over this quarter and potentially through the summer is because of these 10 reasons right here. So first of all, you saw that the dollar is dramatically dropping, but more importantly, inflation is topped. It's heading down lower. You can see that we're coming all the way down to 6.3%. And we've got the next announcement on this, I believe, early to mid-February. You usually see the actual planning in the market. So they will forecast that we are going to pivot and then drop rates, and markets price things into the future, 6 to 12 months. And I've shown this chart before. The markets usually have a big drawdown, AKA a sell-off after the Fed pivots. So that's what everyone gets wrong. Is it's like the person that, sees a yellow light when they're pulling up on their car. There's two different types of people. One person sees the yellow light and they're about to approach the light, and they just step on the gas a little bit and go through the yellow light before it even turns red. There's a second type of a person that sees the yellow light potentially coming. Maybe they see the countdown on the walking path on the side, and they watch the countdown, and then they slow their car down, and then all of a sudden it turns red, and then they speed up because they're like, let me try to just get through here. A lot of retail traders are going to just try to get through here when there's a Fed pivot because they think that that's bullish, and they're going to end up buying the top on this rally. I can tell you that is going to happen. There's going to be a rally potentially who knows how high we go. I'm not predicting how high we go. Maybe between 4,300 and to the top here of 4,800. I think it's going to be somewhere in that zone. I don't know that we're going to go to new all-time highs like a decent amount of other investors believe, but I do think this relief rally is going to catch a lot of people off guard, and then we're going to end up in a place where a lot of retail starts buying the top because the pivot is coming, and then shebang-a-lang-lang, we're going to see a massive drawdown, and a lot of people are going to be stuck. I am actually very bearish, but again, short term, I am bullish because of these reasons. Large company layoffs have also been occurring, which typically signals the short-term bottoms of markets, guys. Believe it or not, it can actually be bullish when companies are laying off tens of thousands of employees in the short term. It actually allows their margins to be larger. And also, like we've seen potentially with Twitter too, Elon Musk fired like 75% of their employees, and they've seen the most activity on Twitter ever, and are actually starting to become a lot closer to actually not burning through. I think it was like $1 million every like few days that they were burning through. It was pretty bad burn rate here. So actually, this can be bullish, and it can be, since this is more of a lagging indicator, and again, the markets will price in the future. A lot of the times you'll actually see these big tech companies when they're laying off, that is a local bottom or a bottom depending on where we're at in the overall cycle. Indexes that typically lead the S&P 500, such as the FTSE 100, are at or very, very close to all-time highs. From a technical perspective, I talked about this inverse head and shoulders, broadening descending wedge. We also had bullish divergence. And if we look back, here's the bullish divergence on the CCI, RSI, MACD, a lot of different things. And then when we talk about crypto from that perspective, we've gone over this chart here, which is the bottom has actually been exactly 54 weeks. And this happened once again, okay? From the bottom to the top, you will actually see it's been 54 weeks, which the bottom was 15,500, which I called that to the day. And I also posted on Twitter my exact buy limit orders that shows you that I bought Bitcoin at 15,500. All right. Also, very similar to the 70s and / early 80s, where we were in a stagflationary environment. Same thing was happening. We had a 28% drawdown. Guess what the drawdown here, guys, was? It was very coincidental, right around 28%, 27.78%. Very, very similar there, okay? And then also, when everyone is pointing towards one thing happening, everyone's yelling recession from the mountaintops, everyone's yelling 2008, oh, tech bubble, blah, 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 blah. When everyone is pointing to that direction, guys, a lot of the times that does not happen, okay? The herd is usually wrong. You got to realize when you're looking at charts, you're looking at pricing from an exchange, a brokerage, whatever, that is on the secondary market. So in order for you to win here in a trade, someone actually has to lose. That's why it's called a zero-sum game, and you have to act more like a shark in these markets and do what others are not actually doing. So again, I do potentially see a relief rally here happening, and I am positioning my portfolio slightly more towards the bullish side to catch this type of a move, which I do want to talk about crypto right now. We're actually just breaking. If we were to look on a logarithmic chart, we are breaking that downward resistance that we've had since the top all the way back in November of 2021. You can see that we are actually breaking and closing above that in my next major areas of opportunity, 25,500 on Bitcoin, then catching this big area of volume around 28,100, and then the top here right before the big sell-off right around 32,500. And again, I do think that the probability is in the odds. So over a 50% probability, I am playing out in my own, personal opinion and also my portfolio, over a 50% probability that we do come up through these targets. Because now, while that may say, maybe you're a traditional, financial professional and you think that that's kind of crazy, 111% rally for Bitcoin off of a bear market low after a 1-year bear market low is not big at all, guys. That is very minuscule to what we have seen historically. If you guys have watched my content on here, typically, we're having over 300% type moves on these bear market rallies. which usually when it actually breaks out, it's about 90 days or so from when it really starts to break out to the top of that bear market rally, which in this case, if we were to do that, that would put us at the end of March, which is exactly kind of the time frame that I'm looking at, is the bear market rally through March. I do expect the financial markets and the stock market to continuously rally throughout this quarter, potentially into mid this year. And then again, I am actually pretty ultra bearish on markets heading into the end of the year, which is a really, really great opportunity, guys, which, if you can catch this type of a move on the bear market rally, let's say you catch a 100% move. Let's say you just catch an 80% move, whatever it is, okay? And that's in crypto. Maybe in stocks, you're catching a 10% move. I don't know. If you're catching somewhat of a rally type move, you're able to secure some cash, and then we do head lower in the markets. If you secure cash up here and then buy the dip once again, that's going to put you up in such an incredible position, especially if we're talking crypto right before regulation is happening, right before this, potential massive deleveraging is happening. And then I think it's going to be a huge, huge cycle into 2025. Massive opportunity. I do think that the lows are in for crypto. I do not think that we see Bitcoin head below 15,500 again. And I do think that that was a low, but that's not to say that maybe, Bitcoin comes down to the high teens. Okay, maybe 17, 16, maybe the low 20s. I'm not sure exactly where it's going to pull back to. But again, I do think that the lows are in for many reasons that I've mentioned on a lot of my other videos and all the content that I post on Twitter, specifically this one and a lot of other threads that we've posted here recently. All right. I would love to hear your opinion. Again, I give my opinions because I look at the totality of the situation that we're in and I make an educated judgment because this is pretty much all I study and focus on. And this is not me telling you what to do. You have to be a student of the game and decide what's right for you based on your own allocation and portfolio. I actually, unlike a lot of other people, I will let you know what I'm doing as far as my thought process, why I'm thinking the way that I'm doing, the time frames, the targets, because ultimately the people that don't give you anything, any detail on that, you don't know what their, educated decision making is and why. All you hear them is talk about, oh, the Fed raised rates and now the S&P is going up. Okay, what does that mean from a positioning standpoint? How do you actually take action on that? And that's exactly why I share this, so you can listen to my thought process and understand why I'm doing what I'm doing, not to tell you what you are doing or what you should do. You have to be the educated decision maker. And if you're not capable of doing that because this isn't your game, then go invest into a fund, use an asset manager, hire a, financial professional, do what you do best. All right. So we'll see if Bitcoin does break out of its highs to 25.5. I think it is inevitable. I'm just catching a quick short, not even to the previous local high here, just right up to 23,645. And I do want to give a quick shout out, not to Jerome Powell, but to the other Fed, which is the Fed algorithm that we have been running up 70K in profit, doing 21% per month, and has been absolutely crushing it. Today, I already made $1,400 this week, $3,800. And this year, which again, it's only February 1st, up $46,000 this year. And we have many, many other winners. You can see last month it actually did 24%. And if we were to go over to the good old Pelosi bot, this is another algorithm that we run. This was up, what was this up? This is up 22%. Last month, it is winning 86 and 97% of its trades, and it's averaging right around 13% a month, but actually it really was slow last month. Already up 1.47% today and 6.44% this week. If you want some information about licensing these softwares from us, there's a link in the description below. These are not our average or typical results of our clients. I'm just showing you what the actual track record here. This is my FX book that verifies the track record of this performance. Okay, this is not me telling you what these numbers are. This is what a third party is showing on a tracked, unbiased software that is showing you how this is performing. Okay. So anyways, if you want some information, there's a link in the description below. Happy trading. Good luck to you this year. Let me know your thoughts on where you think the markets are heading. Would love to hear why. But if you do leave a comment on what you are saying, please back it up with some type of data or thought process, because I really don't care about your emotional opinion. Thanks so much for watching, and I'll see you here on this next video.